Have you missed the deadline of 31st December 2022 to file the income tax return for the financial year 2021 to 2022? Don't worry, we have a plan B. As we all know, the last date for filing the income tax return, including the belated return and revised return for the financial year 2021 to 2022, was 31st December 2022. However, if you have missed this deadline, then you have an option to file updated income tax return, or also known as ITIU. Let's understand it in detail. The Budget 2022 has introduced Section 139 Clause 8 to enable an option to file an updated ITR for those individuals who have missed the chance to file a tax return for a financial year. There are certain conditions attached to it. They are: when to file. You can file the return within 2 years of the end of the relevant assessment year, that is after 1st April 2023 till 31st March 2025. Have to give reason for filing. You will have to give reasons for filing ITIU. The reasons may be non-filing of return within the last date. How many ITIU can be filed? A taxpayer would be permitted to file only one updated return per assessment year. How to verify the return? The return can be verified only through a digital signature certificate in tax audit cases, and filing of return by electronic verification code (EVC) can be an alternative in non-tax audit cases. Layout of the form. The layout of the form has been kept very precise to help the assessee to input the relevant information easily. Only amount of income to be offered to tax is to be specified under the prescribed income heads. No breakup of income or any details information is required to be submitted, unlike the regular ITR forms, and the exact reason for filing the updated return is to be submitted in the form itself. Interest and additional tax payable. If the updated return is filed within 12 months from the end of the relevant assessment year, that is in our case within 31st March 2024, the additional amount will be 25% of the due tax and interest, and if filed after 31st March 2024, 50% of such tax and interest have to be paid. When an updated return will not be allowed. If a prosecution proceeding is initiated by issuing notice for a particular assessment year, or if it has the effect of showing a loss, or reducing the total tax liability determined previously, or resulting in a refund, or increases the refund. When the return will be considered invalid. If a taxpayer files an updated return and does not pay the additional taxes, then the return would be tendered invalid. It is always advisable to file the income tax returns within the due date to avoid payment of additional interest and penalty. Thank you for watching. For more updates, do subscribe to my channel.